Hello sir, welcome to the show. Now, last time we spoke, Nifty was trading in a range. You were cautious, but since then we have seen a big breakout of about 200 points on the Nifty. Does that open doors for a new lifetime high, sir?
So I'll break it up into two parts. One is the trade, and one is the big picture view. So the concerns on the big picture, of course, do not go away, with a small move in the Nifty. What it does do, however, is because we went past 19,850, which is the hurdle that we were really watching for all of last week, is that it does open up the possibility that we do, go back to the lifetime highs and even stretch beyond that a bit into early parts of December. So that on a trade basis, it does become bullish, but medium to longer term, the concerns remain, and therefore you will have to be a little more, careful on this move on the way up.
All right, sir. Week in, week out, we have been talking about the exuberance, the rally that is playing out in the broader markets. I think mid-cap index is on a 18-day winning streak. Valuations-wise, are we approaching that bubble territory?
It's a good question, but when we really compare it with historical data, the problem is that the data has changed because we moved away from standalone earnings to consolidated as far as what NSE provides in 2021. So right now, if you look at say mid cap, small cap, P ratios, probably see them in the 28, 29 zone, whereas they'd almost gone to 60, 70 times in the previous cycle. I think to some extent it is comparable. So, if you adjust it backwards, you are getting to the top end of the range. You are not in extreme, but very close to extreme territory. But in individual names, it does look like that. It may not be across the board, but in individual names, you have seen ratios really go beyond the growth that is really happening, on a quarter-to-quarter basis. And that is where the concern is, and that's partly why you have had sectors like public sector stocks do well, because there was this huge valuation mismatch in the market, and a lot of money got reallocated to value stocks compared to growth stocks.
Any pockets of opportunities looking in the mid-cap in the broader market, sir?
No, I don't think so. I think caution will prevail. Like I said, this is essentially becoming a trader's market. We are going to be, looking at it from what we call cycle to cycle, and by cycle we usually refer to the momentum cycles that we measure using our momentum indicators. And each cycle amounts to a trade that lasts for somewhere between 3 to 5 weeks, either bullish or bearish, and that is how we are going to approach it. Longer term, I think we do still see issues like you asked. Mid and small caps are in close to extreme territory, so we would not really look for opportunities there. What we are really looking at is encashing what we can, and protecting capital and keeping space available in terms of increasing the cash level, so that whenever there is a sell-off for some reason, and there are many headwinds, any of which can play out, we get a better entry price in some of the good stocks.
Good morning, Rohit. Amit here. I would like to drive your attention on another trend that we are observing. Now, back in September 2022, FIIs left the shores of India mostly on the back of Fed rate hikes. In the last 5 days, 5,400 crores of rupees worth of equities have been purchased by FIIs. Now, which sectors do you think are benefiting most from this trend?
Well, I think it's an entire basket, and a lot of FII flow also goes into large cap. So remember, the large cap underperformance has been to a large degree, especially in banking, assigned to these outflows from FIs, because they had a very large holding in the private banks. So if you reverse that trend, the immediate beneficiary becomes banking again. So you actually saw Bank Nifty yesterday surpass the short-term high that it had made a week back, immediately within a day. And that's the kind of reversal you actually end up getting in, say, financials, which has been one of the weakest spots, essentially because of selling that was coming in from FIs. But in general, I would say large caps benefit, and which is when you actually start seeing Nifty perform much more strongly, because till last week it was looking like a very lethargic advance. Volumes last week had really dropped to a 1 month low, and from there we've actually seen things pick up a bit on these inflows. So that's how it will be. You'll probably see large caps doing better than mid caps when FI flows really move in.
Rohit, with respect to banking, do you foresee a sort of a rally in banking stocks, or it's just going to be a blip, sort of a spike?
No, I don't think it should end in a blip. It probably, if you asked me this few days back, I would have said so. But now that we are past 19,850 on the Nifty, also, I think what the setup ends up being is that all these indices try and attempt to go back to the highs, which actually means going back to a 47,000 kind of level for Bank Nifty all over again. Of course, that doesn't happen in a day. It takes several weeks for something like that to happen. We'll have to simply trail, with some kind of a moving average, some kind of a support, and try to ride the move higher for banking. This is not going to. I don't think it ends in a blip, because some of these stocks had reached extreme levels. To just give you an example, and we don't really give advice, but I'll mention two stocks as an example. HDFC Bank, the entire rise that it saw last year was retraced up to 61% at the recent bottom. So that's a significant reinvestment against many other stocks that have done well, especially in mid caps and so on. So it had that very deep dip, and from there it started to bounce up, and so that's a critical level that has held. Doesn't really break easily once it has held, so it gives you confidence that you've got good support there. Another one which has been beaten down for a long time has been Kotak Bank. There also, if we go to say a monthly chart, then we actually find that it took support on the 40-month average, and for the month of October, it actually closed positive, not breaking that average. And so from there now, we are seeing a slight pickup. It's not been as strong so far as HDFC Bank, but the main point being that certain long-term supports did not break and were tested during this phase. And that gives you hope that financials can possibly make a comeback if, like you mentioned, FI flows are turning.
And also wanted to get your view on the IT pack on the whole. The GDP inflation, GDP growth data from the US has been strong. Bond yields have eased significantly by about 75-80 basis points or so. Is that a sector that could perhaps do well from here on?
So possibly it does well. I do still have some reservations with the IT pack, because we are not very happy the way the prices have advanced from the March low. And at the March lows, I did think that possibly we made a bottom for tech, but the rise from there doesn't give confidence. Having said that, the markets are generally going up as long as the US tech is doing well. Indian IT sort of trails that. And of course, there's been that divergence, mid cap IT doing better than large cap. That will not change. But when we generally talk of the IT sector, we are talking of the large caps as well. Where I do think that the risk remains that if you do at some point of time see a slowdown in the US, which is a hanging risk which has not gone away, which is why I said that longer term we still want to hold a certain amount of cash, because entering into 2024, this is the last month of the year. High interest rates and the possibility that they don't come down early enough can cause a meaningful slowdown in the US growth cycle in the year ahead. Many data points have already weakened, even though that GDP number appears high on the back of government spending mostly. Many other data points down to housing sales have been weakening, and therefore if that continues, it would have some kind of a pressure on the Indian IT pack in general. So that is why it's not something I would want to go outright and bet on. But as long as markets are good, IT stocks will not fall immediately. That's the only good side.
Now, Rohit, before we let you go, you said something about holding cash positions, because you expect market to be volatile going forward. Is that a virtue that has been lost on us? Because the markets currently, we hear about investors chasing momentum and working with leverages. Is holding cash something that is lost on us?
Yeah, I don't know how everybody in general is positioned, but surely we've seen a lot of SIP flows where people are just allocating money, which is a completely different game. Which is the good side of it is it has supported the market. But for investors who are individual, when you're talking of people going on margin and who are managing their own portfolios, uh, holding cash might have appeared as a pain point. But we didn't even start recommending that till I think October of this year. For most of the 9 months, I was actually bullish on the markets. I've sort of taken 2 steps back only in the last 1 month, and since then been thinking that cash is a good position to have. So yes, uh, uh, people will feel a missed out feeling. That is, especially when you see a rally like the type we are seeing right now. But I think you only see the advantage of creating cash when blood is actually on the streets. And at that time, you feel, oh shit, I should have had the money to buy at this level. And so that is something to seriously think about.
All right, that's Mr. Rohit Srivastava for you. Thank you for joining us here on First Six, sir.
Thank you. Pleasure.